Revenue 10 to 12x when a sudden policy shift led to Harvard losing $2 billion in anticipated federal research funding over the next decade. The university faced a stark inflection point. The challenge was clear. How could Harvard continue to accelerate world-class innovation without relying so heavily on government grants? The answer may lay in the strength of its Office of Technology Development, a powerhouse for commercialization and collaboration that could transform Harvard's innovation economy by deepening ties with industry. Let us explore how Harvard's OTD might adopt a multi-pronged strategy to grow industry funding from $300 million to over $3 billion, a 10 to 12x leap grounded in strategic innovation, partnership, and scalability. Theoretical strategic solutions to maximize industry funding. 1. Scale high-impact industry partnerships. Forge multi-year, multi-million-dollar strategic R&D alliances with leaders in biotech, AI, energy, and more. Develop joint research hubs within Harvard. Forecasted revenue, $1.2 billion, $1.5 billion. 2. Expand venture creation and acceleration programs. Launch a Harvard Industry Startup Accelerator and expand EIR support to spin out 300+ ventures over 5 to 7 years, with joint funding and licensing support. Forecasted revenue, $600 million, $900 million. 3. Sector-focused licensing consortia. Create themed consortia, for example, CRISPR, green energy offering bundled IP and early access to 10 to 20 firms per vertical, in return for upfront capital and royalties. Forecasted revenue, $250 million, $500 million. 4. Global corporate engagement strategy. Build global R&D alliances with EU, MENA, and Asia-based corporations and sovereign innovation funds in exchange for co-located hubs and knowledge exchange. Forecasted revenue, $400 million, $700 million. 5. Data-driven commercialization pipeline. Use AI and market analytics to identify the most commercially viable research early, increasing licensing velocity and hit rates. Forecasted revenue, $100 million, $250 million. 6. Co-investment and equity sharing models. Allow corporate partners to co-invest in startups in return for equity and performance-based licensing, with flexible terms and backloaded royalties. Forecasted revenue, $300 million, $600 million. 7. Expand entrepreneur-in-residence air networks. Deploy more EIRs with deep sector expertise into labs to help translate dormant or emerging IP into fundable companies or licensing deals. Forecasted revenue, $150 million, $300 million. Aggregate industry funding potential to 3.0 B for 0.75 B. This hypothetical forward-looking roadmap may help transform a moment of funding loss into an opportunity to architect a thriving, industry-integrated innovation ecosystem, one that keeps Harvard at the forefront of global impact.